Jeep is bleeding. Once hailed as the king of rugged American freedom, Jeep is now facing a brutal financial nosedive. Customers are leaving, dealers are closing, and a $62 billion market cap has nearly evaporated. This wasn't supposed to happen. Stellantis had a master plan to turn Jeep into a global luxury icon. Instead, quality collapsed, prices soared, and loyal fans started to walk away. The irony? It all began with one bold pivot that was meant to save the brand.
Most people have no idea what really went wrong.
So what happened to Jeep, and why is it falling apart so fast? How Stellantis mistook luxury for loyalty and killed Jeep's soul. Jeep was never supposed to be this shiny, this polished, this expensive. It was the brand that thrived in dirt, not design studios. A name born on battlefields, not in boardrooms. Jeep didn't scream luxury, it growled utility. It was raw, durable, and defiantly American. And for decades, that's exactly why people loved it. But love doesn't scale, and simplicity doesn't impress investors. So when Stellantis took control, a Frankenstein merger of legacy automakers and big ambitions, they didn't just inherit Jeep, they inherited a question. How do you turn rugged tradition into exponential profit? Their answer? Premiumization. It was a seductive play. Across the industry, profits were shifting from mass market to high margin. Why sell 520K cars when you can sell one for 100K? Fewer logistics, better margins, cleaner spreadsheets. The logic was cold, corporate, calculated. And Jeep, it became the test subject. Almost overnight, the tone shifted. No more dusty off-road campaigns, no more gritty Americana. Now it was panoramic sunroofs, quilted leather, and curated lifestyle experiences. The crown jewel? The Grand Wagoneer, a luxury tank with night vision, massaging seats, and a six-figure price tag, designed to rival Range Rover, marketed like a status symbol. But here's the flaw.
Jeep wasn't a status symbol, it was a symbol of freedom.
And Stellantis didn't understand the difference. They believed loyalty would follow price, that the same buyers who loved their scratched-up Wranglers would happily trade them in for velvet trims and touchscreen dashboard. But that loyalty wasn't to Jeep's badge. It was to what the brand stood for. And cultures don't upscale cleanly. The working-class buyers who had built Jeep into a household name didn't want prestige. They wanted purpose. They wanted cars that could take a beating, climb a mountain, and never apologize. Stellantis thought they were selling an SUV, but what they were really selling was identity. And that's the one thing you can't rebrand. By 2023, the damage was showing. Sales fell, dealers panicked, customers walked away. The premium buyers Jeep tried to impress, Lincoln, Cadillac, BMW, and the loyalists, they felt abandoned. The result? Jeep was stranded between two worlds. Too expensive for its roots, too clumsy for true luxury. A brand without a tribe. From the outside, the strategy looked smart. Profits rose for a moment, margins improved for a quarter. But underneath, the foundation was eroding. Because Stellantis hadn't just changed the product, they had broken the promise. And the cruel irony, just as Stellantis turned Jeep into a luxury experiment, sales were already breaking records. So yes, Stellantis followed the trend, but in chasing margins, they lost meaning. And in the auto industry, meaning is everything. Because when you forget what you're really selling, your customers won't. The brands were booming. The strategy was working. So why did Stellantis try to fix what wasn't broken? Before the crash, before the crisis headlines, before the desperate dealer letters, there was momentum. Real, relentless, record-breaking momentum. The year was 2020. The world was frozen. Economies shut down. Supply chains cracked. But Jeep, Ram, and Dodge? They were on fire. While competitors struggled to deliver, Stellantis had inventory, and people were buying. In 2019, Ram sold over 700,000 trucks in the US, an 18% jump from the previous year. That kind of growth doesn't happen in a saturated market. It doesn't happen unless something is really working. Jeep's Gladiator, introduced that same year, defied logic by doubling sales in 2020. During a pandemic, during lockdowns, while factories worldwide were shut down. Dodge, a brand critics had already declared dead, suddenly posted a 29% spike in Q1 2021. Not because they followed EV trends or chased sleek designs. No, they did the opposite. They leaned into what made Dodge unapologetic power. The Charger and Challenger became rebellion on wheels. roaring through empty streets while the rest of the world stayed inside. This wasn't just a business win, it was a cultural moment. Jeep wasn't selling cars, it was selling escape. Ram wasn't just a truck, it was independence on 4 wheels. Dodge wasn't dead, it was dangerous. And people wanted danger. The formula wasn't complicated. These brands stayed true to their roots. The Jeep Wrangler was still boxy, basic, and built to take a hit. The Ram 1500 still looked like it could plow through a wall. And Dodge? It didn't even pretend to care what your HOA thought. Even mainstream media noticed. CNBC, Bloomberg, and investor calls were suddenly hyping Ram and Dodge. Jeep gained new life with younger buyers, especially millennials hitting their real car phase. They didn't want touchscreens, they wanted something that felt real, something that could survive. The timing helped too. With interest rates near zero, financing was easy. Supply chains favored existing models, and Stellantis was already ahead. When new car inventory dried up, demand exploded, and so did prices. By 2021, the average car transaction price hit $47,000, up from $37K in 2019. Customers were paying MSRP or higher, no discounts, no incentives, just demand. And Stellantis? They had record margins, loyal fans, and full momentum. They didn't reinvent anything. They didn't have to. They simply stayed the course, and it worked. So here's the question. Why change it? Why mess with a winning hand? Because somewhere in those boardrooms, someone decided this wasn't enough, that these brands, built on grit, needed gloss. That loyalty wasn't worth as much as luxury. That short-term momentum wasn't impressive unless it could be maximized. But that decision, subtle at first, was the crack in the foundation. And that's what makes the fall so frustrating. This wasn't an industry shift. This wasn't a tech disruption. This was a choice. They had everything and decided it still wasn't enough. It didn't happen overnight, but the shift was unmistakable. Jeep stopped feeling like a companion and started feeling like a calculation. The message was clear. You'll pay more, and you'll be grateful. Stellantis didn't launch a new Jeep, they launched a new attitude, one that traded mud and grit for gloss and arrogance. At first, customers hesitated, then they resisted, because something felt off. The same rugged brand that once celebrated scars and dents was now bragging about touchscreen panoramas and stitched dashboards. But the soul was missing. This wasn't about price alone, it was about what that price implied. Jeep buyers were used to value, not vanity, to functionality, not flair. They didn't mind paying for performance, but now they were being asked to pay for packaging. And packaging doesn't climb trails. What Stellantis missed was nuance. Loyalty doesn't mean blindness, and when prices rise faster than purpose, trust erodes. Jeep had always been that rare brand, aspirational without being elitist. It belonged in every driveway, whether downtown or deep in the woods. But now, it felt engineered for showroom selfies, not real-world resilience. Customers started noticing, not just in their bank accounts, but in their gut. It looks fancier, one longtime Wrangler owner said, but it doesn't feel like mine anymore. That disconnect was the real cost, because when a brand stops feeling like yours, it starts feeling like theirs. Distant, corporate, empty. The higher prices might have worked if the emotional connection had stayed intact, but Stellantis broke that link. Buyers didn't rush to BMW, they just walked away. Dealers began reporting a new kind of hesitation, not about interest rates or specs, but about identity. What happened to Jeep? Why does it feel like something else now? Where did the edge go? And slowly, that hesitation turned into abandonment. Sales softened, loyalists ghosted. New buyers kicked tires, but bought elsewhere. And the ones who did stay, they stayed with doubts. This wasn't a pricing error, it was a perception collapse. Because Stellantis didn't just raise prices, they raised expectations without delivering on them. And expectations are fragile. Once broken, they don't rebuild easily. Assuming brand equity could stretch forever, that heritage was bulletproof, that customers would follow even when the road led nowhere. But connection isn't infinite, and culture doesn't upscale cleanly. Stellantis tried to turn a tribe into a target demographic, but Jeep was never about demographics. It was about identity, independence, and instinct. And when those vanish, no spreadsheet can save you. In the end, perception does something dangerous. It changes behavior. First comes hesitation, then comes comparison. And before long, quiet doubt turns into cold, hard numbers. No longer emotion, just data, and that's when the real collapse began. Margins looked fine until everything else fell apart. The breaking point didn't come all at once. It came in numbers, sharp, cold, undeniable numbers. Jeep sales in the US dropped from 642,000 in 2023 to 587,000 in 2024. Ram fell even harder, from 569,000 to 373,000. That's not a dip, that's a free fall. And suddenly the strategy stopped making sense. Dealer lots were no longer empty, they were full. Showrooms sat quiet, orders dried up, and the same customers Jeep had counted on, they stopped showing up. Inside Stellantis, panic set in, but outside, the anger had already begun. In early 2024, the National Dealer Council sent an open letter to Stellantis CEO Carlos Tavares. It wasn't subtle. We've warned you for 2 years. This is a disaster of your own making. Dealers, who had once been Jeep's loudest evangelists, were now its loudest critics. They accused Stellantis of abandoning the base, of chasing luxury dreams with off-road bones, of ignoring the ground truth in favor of boardroom fantasies. They were right, because this wasn't just about falling sales. It was a systemic failure. Interest rates had climbed back to 5.5%, making financing a $60,000 Gladiator borderline impossible for Jeep's middle-income core. The premium pricing strategy that looked clever in 2021 now looked delusional in 2020. Customers weren't just opting out, they were offended, and it showed. Dealer satisfaction scores plummeted. Customer sentiment tanked. Used Jeeps started outperforming new ones in value perception. The public narrative flipped. What used to be America's most capable SUV was now a meme, a punchline, proof that legacy brands had lost touch. Inside Stellantis, the cracks deepened. Executives began quietly resigning. Factories shut down. Thousands of employees were laid off. And shareholders, they weren't patient. Stellantis stock, already battered, began spiraling. And for the first time, analysts stopped asking, can they recover? They started asking, should they? What made it worse? There was no external scapegoat, no global collapse, no tech disruption, just a decision. One bad bet. The product no longer matched the audience. The audience no longer trusted the brand, and the brand no longer knew what it stood for. This was not a course correction. This was brand erosion, playing out in real time. Trust was gone, culture fractured, strategy exposed, and the worst part, recovery was no longer the conversation. Survival was, because the moment your dealers turn against you, the moment your most loyal customers walk away, and the moment your boardroom loses faith in your CEO, it's not just a collapse, it's the end of control. But endings aren't always accepted. Inside Stellantis, there was still hope. Hope that the damage could be managed, the story rewritten, the brand reborn. But what came next wasn't a turnaround. It was a tone-deaf response to a crisis they never truly understood. They tried to make Jeep a Bentley, but nobody asked for that. By the time Stellantis realized their mistake, the damage was already done.
Stellantis posted a loss of $2.7 billion.
The dealers had spoken. The customers had walked. The numbers had collapsed, and the board had run out of patience. Carlos Tavares, the man who engineered the Stellantis empire, was out. Not at the end of his contract, not on his own terms. Early, quietly, gone. Official statements framed it as a strategic leadership transition. But inside, everyone knew it was a forced retreat, a face-saving exit for a plan that had lost the plot.
It is an understatement to say that H1 2024 results were disappointing and humbling.
What's ironic, no, tragic, is that Stellantis already had premium brands. Maserati, Alfa Romeo, luxury marques with history, design, and high-income buyers. If they wanted luxury margins, they had them. If they wanted to court the high end, they didn't need Jeep. They just needed patience, marketing, and execution. But instead, they tried to transform Jeep, turn it into something it wasn't, something it never needed to be. And the result? They alienated the working-class loyalists without convincing the luxury buyers. They created a product with no clear audience, too expensive for the original fan base, too awkward for the premium crowd. It was a textbook case of strategic overreach. And yet, even in the face of collapse, Stellantis doubled down. In late 2024, they announced a new wave of refinements, repackaged trims, slight price adjustments, more chrome, more tech, More marketing jargon. They called it elevated brand alignment. Customers called it out of touch, because the core problem wasn't the pricing, it wasn't the feature set, it was the philosophy. Jeep didn't need saving, it needed respect. It needed to be left alone to do what it did best: build rough, capable, character-driven machines for people who don't care about brand perception. They care about getting somewhere when the road ends. But that message never landed. And when the recovery efforts came, they weren't bold. They were bureaucratic. Too slow, too safe, too late. The irony? Jeep's best chance at redemption was to do nothing. To resist the urge to upscale. To stay grounded in what made it iconic. Instead, Stellantis tried to reinvent it. They chased margins, chased image, chased validation. But by the time they looked back, the road was gone. Because trust, once broken, doesn't return with a press release. It returns when people feel like you finally understand them again. And Stellantis never did. And while Stellantis was still chasing margins, customers had already moved on. Because when meaning fades, money follows. You don't lose $62 billion overnight. You lose it one bad decision at a time. Jeep had everything. A legacy built in war, a loyal following, and momentum even in crisis. But Stellantis forgot what they were selling. They weren't selling vehicles. They were selling freedom, function, trust. And when they traded those for leather seats and $80,000 price tags, something broke. Not in the car, in the relationship. Because when customers stop believing in your brand, the numbers follow. This wasn't a product failure. It was strategic, calculated, executed. That's what makes it worse. They had Maserati and Alfa Romeo for luxury. They didn't need Jeep to play that game, but they pushed it anyway. And the customers, they didn't complain. They just walked. Too expensive for the loyalists, too clumsy for luxury buyers. What was once a symbol of resilience became a showroom ornament. Polished, overpriced, and out of place. Carlos Tavares was removed. Dealers rebelled. The company lost $62 billion in value. And Jeep lost something far harder to recover. Meaning, because in business, you can recover from bad quarters, but you can't recover from lost trust. That's the real lesson. When brands abandon who they are, customers abandon them. Not with outrage, but with silence. Jeep didn't fail because it wasn't good enough. It failed because it forgot why it mattered. And once you forget that, you've already lost. Jeep wasn't the first brand to trade loyalty for luxury, and it won't be the last. Check the channel for more stories of companies that had it all and lost everything chasing prestige. Because meaningless brands don't survive.